Well, there are different kind of moving average, and I've been using moving average since I've been trading. So I think I want to correct the guy based on how he complained to me that he doesn't know how to use moving average and he's not been profitable with them. Okay, let me explain to you everything I've been talking about moving averages from all my videos. I talk about 900 of recently. Yeah, I talk about 200, which I've always been talking about. I talk about 100, which I've always been talking about. Okay, and I talk about the price. And if you watch my video so well, you will see me talk about, you will hear me talk about Bollinger Bands. Okay, so now how do you become profitable with moving average? Okay, before I talk to you about how you become profitable with moving average, I want to tell you one thing first. Disadvantage of moving average. Okay, you see, with moving average, the tendency that you are going to miss your entry is 90%. This is the first thing you want to bear in your mind, that when you are using moving average, okay, there is every tendency that you're gonna miss your entry. This is 90%. Okay, but the advantage of moving average is that even if you miss your entry, okay, you have a lot of entry points on that moving average. Okay, I do use this moving average 200. Okay, moving average 200, like I said, when the price, and I don't mean the candlesticks. Okay, when I go watch my video, you hear me talk this many times. I don't mean the candlesticks. That's not the price. The price I'm talking about is the moving average 9. Okay, which is this the middle band, the central band of this Bollinger Band. Okay, I made my moving average 9. This is Bollinger Band 20, period of 20 Bollinger Band. Okay, and the middle band is period of 20. Okay, but I have a yellow band around it, just like this, moving average 9. So don't worry about that. But moving average 9, moving average 20, they are same. Okay, Bollinger Band period 20 with the central band 20. Okay, so everything is okay, it's same. You don't need to worry about the moving average. But I must be specific about this moving average 200, which is this yellow one I'm touching. Okay, this moving average 200, okay, it's for long-term trading. Okay, it's for long-term trading. It's not for short-term. It's for long-term trading. Okay, and this moving average 900 is for long-term trading. Okay, so what you're seeing here is that I talked this many times, that whenever the price, which is this moving average 20, okay, or the central band of this Bollinger Band cross the moving average 200, which means the candlesticks here is above the moving average 200. Okay, I think this is the time we are supposed to be buying in the market. And whenever we are below the moving average 200 here, okay, whenever the candlesticks or this moving average 9 or the moving average 20, the central band of Bollinger Band, is below this moving average 200, I think we are supposed to be selling. All right, good. So before I go further now, let's talk about how do you now become profitable with this moving average 200 and all this moving average I've been talking about. Okay, let's say, supposing you miss the cross of this moving average 20 crossing over the moving average 200, this 20 crossing over this 200, this yellow. Supposing you missed it. Okay, this is where a lot of people will say, okay, I miss my entry, then I need to go and wait. I need to go and sit down. I need not to do anything at all. You see, let me talk to you about something they call pivot. Okay, pivot, the way some British people will call it pivot. Okay, but let me call it in my own language, pivot point. Okay, pivot point. Okay, good. When you know how to draw support and resistance line, okay, I mean, you can use it as your pivot point, but I don't want to talk about that. Okay, I want to face this Bollinger Band. Look at my Bollinger Band. This is Bollinger Band period 20. Okay, now let me tell you, even if you miss your entry from this crossover of this period 20 moving average crossing this 200 moving average, if you missed it, let's say you miss it, all right, you miss it, then you have to take note of one thing. There's one thing you have to take note of. As long as we are above, the price is above the moving average 200, which is this yellow line of mine, definitely you have to get opportunity to buy into the market. Okay, so the point is when do you actually buy? That is the point we want to talk about here. Okay, so this is exactly where Bollinger Band comes in. Okay, this is exactly where Bollinger Band comes in. Okay, so how do we now make use of this Bollinger Band? Okay, I'm using this Bollinger Band period 20. Okay, so even if I miss this crossover of this period 20 crossing the 200, then I don't need to go and sleep. I don't need to hit my head on the wall that hey, I missed my crossover. No, I don't need to do those things. Okay, this is the reason why this Bollinger Band is on my chart here. Okay, now let me tell you something. You see, when you're looking at the middle band of this Bollinger Band period 20, okay, you will understand that when price, which is this candlesticks now, oscillates around it, separate from it, and comes back below it, below this central band of this Bollinger Band. This is the central band I'm touching here. When the price comes below it this way, when the candlesticks comes below it this way, this is your entry, because you want to buy above the moving average 200. So when this Bollinger Band is also above the 200, then we are up, we should be buying. So you buy when the price comes below the middle band of this Bollinger Band. This is where you buy, and now you buy. Okay, then look at what happens. The price shoot up, okay, shoot up, and still came down below the band. Okay, this is another buying opportunity. Okay, some of you might say, hey, okay, I bought here, but now look at what happened. It's coming against me. Okay, it's not coming against you. It's not coming against you. Okay, because if you understand that whenever we are above the moving average 200, we should be buying, and we should be up. Okay, and then what is the characteristics of being above the moving average 200? So definitely we should be breaking the top. Okay, we should be breaking the top. Look at one top here, broken here. This is another top. Okay, broke it here. This is another top. It's set, and now something is gonna happen here where we're gonna pull over and break all this top. All right, now let me tell you something. When this candlesticks is oscillating around or relating with the central band of this Bollinger Band 20, this is another opportunity to buy into this market. Okay, because what it's talking about is that we're gonna break this top here. We're gonna break it. We are gonna break it, and see, we broke it. price went and came down to relate with this same middle Bollinger Band, okay, and you will see what happened later, that the price will shoot up and separate from this middle Bollinger Band. So what is the point here, and how to be profitable with all this kind of stuff? Okay, how to be profitable is that, you see, you know what is going on, that actually we are above the 200 and we are up, we should be buying, right? You know, we should be breaking the tops, all right? Good. And you know that this kind of movement might continue for a long period of time, okay? Okay, so what you want to do is that you understand the fact that whenever there's going to be a major retracement, okay, that major retracement will end by touching the moving average 200. That is the major retracement. But it doesn't happen all